Many of us like to invest in the future, in technology and innovative companies that disrupt an industry. Well, FinTech companies were created to integrate financial services and technology, making it easier for many users and being able to offer new, excellent, and innovative services as well. Hello guys, welcome back to my channel. If you are new here, which says that 68% of you watching are new and are not subscribed, go and subscribe. It's completely free for you guys and it will help me tremendously. So in today's video, we will talk about different FinTech companies. I have already talked about some of them in this channel, and I already own one of them, and I think this is an industry that has been disrupting the banking industry for so long, but still has a lot of room to grow and expand. So the first FinTech stock is a very requested one in the comment section that I have never talked about before. It is called Paysafe with the ticker symbol PSFE. It is one of the latest FinTech companies to go public via a SPAC merger, and it specializes in a few niches that are offering a huge growth, and you are going to see why. Right now, the stock is trading at $13.98 per share. Obviously, it is up since the merger was announced because of the hype around SPAC companies. The stock is down almost 30% since its peak, which is normal with a SPAC merger after the hype died. But anyways, Paysafe is an online payment company that offers e-cash that is the perfect service for people that don't like paying online with credit cards, for example. Also they offer rapid transfer, digital wallets, integrated payments for your business, online payment, and many more. When I said that they were specializing in few niches that are offering huge growth, it is because they are the #1 company in processing payments for iGaming such as Twitch, Fortnite, and Spotify. Then they are the second global stored value digital wallet for DraftKings and other companies, but I like their connection with DraftKings because the sports betting industry is growing massively, and even more when more and more states legalize sports betting with time. Lastly, they are the 4th largest independent merchant acquirer in the US with their integrated processing payments for companies like eToro, Norwegian, and many more. Obviously, they being linked with huge companies like DraftKings and Fortnite and many more is excellent because while those companies continue growing, Paysafe will continue growing as well. They do have the right to win in valuable verticals such as iGaming, travel and entertainment, digital goods, FinTech services, and integrated payments with such excellent partners such as Google, Spotify, Roblox, and many, many more. Their revenue is mainly divided in 3. 39% coming in from emerging verticals, which includes FinTech services, integrated payments, direct marketing, and more. Then 36% from iGaming, and lastly 25% from small and mid-sized businesses. Paysafe is a profitable company and has an excellent positive free cash flow as well that has been growing nice for the last 3 years. Now, they also have been having a nice growth of 28% year over year, and even though there are other FinTech companies expecting massive growth, Paysafe is expecting a growth of 10% annually in the next 2 years. It is a slow grower company expectations, but it is a very nice company. It has a market cap of $9.64 billion, which is actually not that high if we compare it with other SPAC mergers. FinTech stock number 2 in this list is the only one I currently own and my favorite one since day one, Square, ticker symbol SQ. I have multiple videos talking about this company, but have to say that they have done an excellent job so far. Also, they were one of the big players with a PPP loan that the US gave during quarantine. They also offer multiple services such as sell online and in person, which lets you have checkout links and also have contactless payment or point of sales on your businesses. Second, they have the ship it, deliver it, or offer pickup, which offers point of sales, online store, delivery services, and order manager. They have an amazing hardware for contactless payment, QR codes, and also offer loans and cash flow tools for customers with their Square Capital, where they partner with financial institutes to offer loans to many businesses. These loans are normally short-term loans and for a small amount. They discovered that a lot of their customers could not get financing from traditional banks, and more when those customers were just asking for small amounts of loan below $50,000 The great thing about this program is how loans are paid up. It is baked on their customers' average daily card swipes, meaning that if their business grows faster than expected, they will pay back a bigger amount than someone whose business is growing very, very slow, or maybe even has to close for 1 or 2 days for some reason. That way, their customers do not have the pressure of paying back their loan without having any revenue at the moment. Lastly, they also have Cash App, which in my opinion was a game changer for Square because now they basically compete with PayPal's app called Venmo. With Cash App, they let customers send and receive money. They also let you receive your paycheck, tax returns, and any direct deposit just like your bank account. They offer a debit card, and most importantly, it lets you invest in both stocks and Bitcoin with as little as $1. I currently have an average cost of $153.05 per share. It is a small position in my portfolio since, as you can see, it represents 2.61% of my portfolio, and I'm currently up 61.13% in my position. Obviously, I do regret not adding more at those prices, but I do believe long-term in this company, so I will add with time if I see an opportunity. Investors are pretty excited right now because Square is expanding internationally even more since they announced an early access program for Ireland businesses, and also because of their growth. They were already having such an excellent growth year over year, and in 2020 that growth accelerated massively since they reported a revenue growth of over 101% year over year. Stock number 3 in this list is PayPal, ticker symbol PYPL. It is currently trading at $269.77 per share and has a market cap of $315.43 billion. PayPal is very similar to Square since they also have shop online and send payments method, or send online and receive payments method. It is also a partner with excellent companies just like Facebook, Microsoft, Spotify, Shopify, and many, many more. PayPal has revolutionized the online payment processing world since they are available in over 200 countries. I do have to say that I have had issues with PayPal before when I used to do drop shipping, and I understand that it was them covering my customers in case of fraud, but still it was kind of a pain to work with them at the moment. I do have to say that they are focused in e-commerce as well, which is an industry that will not disappear and still has a lot of room to expand. They have also been having a nice revenue growth year over year with about 20% growth between 2019 and 2020. Obviously, nothing like the 100% for Square, but still a very, very nice company to invest in. FinTech stock number 4 is the latest IPO, a kind of different FinTech company, but still FinTech company, and this is Coinbase, ticker symbol COIN, C-O-I-N. Currently trading at $302 per share with a market cap of over $60 billion. The day they went public, everyone thought it was going to be a very hyped IPO, and it certainly started going up massively. As I said in my Instagram story, that day it went to the moon, and minutes later came back down to earth. Since then, the stock has been dropping, and it even got to $282 per share. I do have to say that the IPO got very high because they announced that Coinbase earned $1.8 billion in revenue for Q1 compared to the $1.3 billion that they had for the whole 2020, which obviously is massive that a company was able to make in a single quarter way more than what they made for a whole year, which, if you ask me, it was kind of weird since 2020 was when literally everyone started investigating and investing in stocks and crypto. But we also have to take into consideration that Bitcoin has been growing up massively for the first quarter of 2021. I do have to say that in my opinion, Coinbase will do excellent if Bitcoin and crypto continue growing up. But if we see a major crash, I could expect Coinbase revenue to decrease because, as they said, their operating results have and will significantly fluctuate due to the highly volatile nature of crypto. Then their net revenue depends on the prices of crypto and volume of transactions done in the platform. Then most of their net revenue derived from transactions with Bitcoin and Ethereum, and if the demand for those crypto assets decline and is not replaced by new crypto assets demand, demand, their business could be affected. Last stock in the list is not actually a stock but an ETF, a high growth ETF, which I would assume you might know. I'm talking about ARKF, which is a fintech innovation ETF from ARK Invest and Cathie Woods. They have built an entire ETF that focuses on fintech companies that focus on digital wallets, blockchain tech, lending, artificial intelligence, e-commerce, and many more. This ETF is for people that would like to invest in the fintech world but don't want to invest in a single company or just don't have the time to do a ton of research in every single company. ARKF ETF invests in companies like Square, Zillow, PayPal, Shopify, Tencent, Coinbase, Apple, and many, many more. For the whole 2020, they had a return of over 104%. Obviously, it is not that like the 254% that Square had or the 115% that PayPal had, but still, it is very, very nice return. Now, if you ask me, I love Square. It has been my favorite for so long. I do have to say that Paysafe has a very nice and attractive valuation right now at $9 billion. The 4 companies I mentioned in this video are very, very attractive as well. I know that $60 billion valuation for Coinbase is high since they reported $1.3 billion for the whole 2020. But if let's say that they are able to report $1.8 billion per quarter for the whole 2021, that would be a completely different image. Obviously, I do have to say that I believe Coinbase is already factoring in that kind of growth, so I would be investing in kind of a high valuation. On Friday, the stock dropped below $300 and I was waiting for it to drop a little bit more because it was looking very, very attractive. I do believe in the long term for all these stocks, and the ETF might give us a nice return as well. Again, I'm not a financial advisor and you should do your due diligence before investing. I do have to say that I think the fintech industry will continue seeing such a massive growth and all these companies will benefit from it. Obviously, there are a lot of fintech companies, but I decided to mention these 4 fintech companies because I like their growth, their expectations, and their company and business. Thank you for watching. Hope you enjoyed the video. Thank you and see you next time.